Hi, this is John Ross, technical trader and analyst at Banyan Publishing. Today I want to talk about gold, and I want to show you one chart that suggests the price of gold is about to find a very significant bottom. Now, it was probably 6 or 8 weeks ago I updated Winning Investor Daily readers about the bullish forces coming together to support the price of gold. Since then, however, the price has done nothing but go down. Traders and investors in the gold futures market are very worried that this slide is just going to continue. I think otherwise, and I think now is a great time for us to get in. Let me show you why. This is a weekly chart of gold futures, and I want you to focus on the blue line that runs across the bottom portion of this chart. That blue line represents the bullishness among large speculative traders in the futures market. And I've highlighted or I've circled a couple points when bullishness has bottomed out. So in the last 5 years, when we've seen bullishness bottomed out, as I've circled, the price of gold has bottomed out as well. Now back in 2013, when this happened, the price of gold went on to rally 19% in just the next few months. And at the end of 2015, after the Fed embarked on its rate hike cycle, the price of gold in the next 6 months ran 30% higher. And then again, in the middle of last year, right in the middle of this sideways range-bound price action in gold, gold was able to rip off a 12% gain in just a few months. And this all happened again when the bullishness reached an extreme low level, just like we're seeing today. This tells me that now is a great time to get in. Now is a great time to buy gold, and I think we can expect as much as a 30% gain for gold in the 6 months ahead. Let me show you one reason why. This is what's called a Fibonacci Extension. I think what we'll see is an extension of the move that happened at the beginning of 2016. So this 30% move, if we consider this price action the consolidation or the correction, and gold does find a bottom here, as I suspect, an extension of that 30% move would take the price of gold to $1,550 an ounce, or a 28 to 30% move from current levels. And that's a great move, and I think we should play it. However, I think it's also worth noting that when the price of gold is rallying, we tend to see even larger moves from gold mining companies. Now, in today's article, I noted 2 very popular ETFs that track gold mining companies. One is the VanEck Vectors Gold Miners Index, symbol GDX, and the other is the VanEck Vectors Junior Gold Miner Index, symbol GDXJ. Now, when gold rallied by 30% back in 2016, the price of those ETFs, GDX and GDXJ, both rallied by triple digits. Both rallied by more than 100% in those same 6 months. Now, these are magnified returns that if you are a somewhat more active investor, you can harness to really ramp up the potential in your portfolio, and the potential of this gold trade that I've highlighted today. So with that, thank you for listening, and we'll talk soon.